Good afternoon, Michael.
Hey man, how you doing?
Good.
Um, I forgot yesterday. Can you hear me okay?
I hear you.
I forgot yesterday to send out the link. I just remembered this morning, so I don't know if anyone's going to come. Um, anyway, I'll just say my bit and we'll see how it goes. Um, it's really choppy out there in the market right now, and everybody's trying to kind of see through the different tea leaves to kind of read into what Trump is saying or Trump is doing, and I feel that this is actually not constructive. Um, it's really difficult when the market has these dislocations to try to go back to basics and be sensible. It's really, really difficult. Um, the market has this ability to change your narrative and your perception. It has the ability to kind of you swing to negativity and then you swing to this is the bottom. And in reality, it it will just take time to see things. And I ask people, listen, I don't really know for sure where the cards will ultimately fall. But I don't want to take any knee-jerk reactions at this moment in time because I just feel that, even if some of the stocks in the portfolio do not recover, there'll be a portion that will recover, and you don't know that until all this dust has settled. I feel that businesses with a strong balance sheet that are growing their free cash flow, um, those businesses will always, in any market, do well. And I feel that we could make money in a sideways market. It's just that it's very difficult when all the air is coming out of the market to have um, any sense of valuation because it becomes very emotional. The argument becomes so emotional, and people have these kind of um, just very visceral responses, uh, and it really is difficult to have a view that, hey, markets do come down. This happens all the time. And this is like the worst case scenario. We're kind of now in the worst case scenario. Now, well, the markets can go down further. They can always go down further. But this is the thing that people don't want. People don't want to be investing in a negative market. And this is the period that we're in right now. Um, and it's important to stick to the principles, having a diversified portfolio, having businesses with different susceptibility to a different interest rate environment. So having some slower growth names, some faster growth names, because you don't really know. You don't know which environment we're going to go into. I don't want to make it will be too easy to start making all these kind of bold macro calls at this point, but those wouldn't be constructive for anyone else. Um, it's really difficult to have patience when the markets are collapsing. It's so difficult. And people feel, and I understand that, but people feel like they have to do something. You have to, do I buy? Do I sell? Like there's a need to do something. And I caution people against that. I say, it's really, really difficult, but just try to not do anything. Try, I say, to kind of sit on your hands, just try, because I don't know. And anyone that says that they know how things are going to unfold is talking their book. I don't know. I'm trying my best to navigate, but what's really important is that I'm happy to adapt when I see that the path has changed. I'm happy to adapt, but it's difficult to adapt when you don't see how the path is going to unfold. Possibly, I don't know, just for the sake of discussion, could be that the European Union finds some way to negotiate with Trump. Trump says, it's a victory. We have forced the Europeans to negotiate with us. We won. We're the ultimate winners in the superpower of the world, and we can move forward from this. So it's not him saying, oh, I admit defeat, but saying, not saying that we compromise, but saying that, yes, I am the winner, and this is the result that I've done for making America wealthy again, and we can move on from this. And you don't really know. But what I do know is that when things get so negative as they are right now, being extra negative doesn't add too much. And it's too easy to get complacent and feel that the world is coming to an end. It's easy. And, you know, it will shine and it will, things will improve, but it's really difficult to see how things are going to improve right now. And I get that. But at some point, things do stabilize. And I'm using experience that I built up in 2018, also in 2020, when we've been through these periods of really sharp sell-offs to recognize, okay, this is some of the learnings that I had. For example, that it's really, really important to back businesses with growth, cheap businesses in and of themselves, and not going to save your portfolio. You want cheap businesses that are growing. This is something that I learned in 2018 that's really, really important. I also learned in 2020 that it's quite important to not have too strong dogmatic views, in the sense that having too many eggs concentrated in one idea, because the market will reshuffle those cards. So you need to have a spectrum of investments to try to navigate. And finally, it's really, really important, once the dust has started to settle, to understand that the game in the stock market is not about timing the bottom. It's not about trying to pick the bottom out and be a hero at that point. The game is really of time with the business. And all this noise that we go through minute to minute and day to day, it gets smoothed out quite quickly. And that's our advantage that we have as investors, if we can just stay in those businesses for 6 months, 12 months, it really normalizes this whole period. And it's a great example that I can find is in February into March 2020, when it was COVID and it was an economic slowdown. It was so abrupt the way down, and it was really abrupt the way up. And that causes people to feel like, oh, it's always going to be like that. It doesn't have to be like that. You can go sideways for a really long period of time, and you can still make money in a sideways market. You can make money in a sideways market if you're willing to have an open mind and say, okay, this business, for example, Supermicro, it has too much exposure to China. I'm wasting my capital here. I might as well relocate it to something else. Once you have a bit more certainty, but the situation is so fluid, and you're not being forced every day to make a decision of where the globe is going, you're just trying to make an investment where you feel that the risk reward is attractive, and you try not to be too much of a hero, and you try to be sensible in the way that you say, okay, I'm investing now, and I'm going to just sit on my hands for several months, and I'm not trying to guess where the market is going to open tomorrow morning. Yeah, that's pretty much all I have to say. I think that the fact that I forgot to send out a reminder yesterday, nobody decided to show up. Also, the market's down, and the portfolio is down. So I get that overall sentiment. Yeah, I don't think anyone will have, if you have any questions, anyone wants to ask any questions, you can ask a question. I don't have a lot more to say. I don't want to kind of be making bold calls at this point because, it sounds smart to pretend that you know what's going to happen, but I'm not sure that's actually constructive, and the value that that provides is rapidly going to dwindle because the market is in a very, very fluid environment right now. And it's, I really ask the people, try to be patient. I'll try to be patient and try to not react and sit on their hands for some time. Um, Even if it feels like, you have to do something to, otherwise you're going to miss out. That's not true. That is really not true. The game is not about trying to time the bottom. When the market improves and sentiment improves, it might be at the end of April, it might be at the end of the summer, but at some point when the market improves, it will be so easy to say, okay, actually these businesses are undervalued. We can go here, we can go there. Or, for example, actually Palantir is a really good opportunity because the U.S. market, the U.S. government is still very much keen on investing in their whole defense infrastructure. I don't know, but it will be a lot clearer in the coming weeks rather than having to make a knee-jerk reaction right now. And it sucks to be in this position. It completely sucks. I can't invest in hindsight. And even if I felt the things back in November would have been too frothy, even if I felt so, I probably would have just kept 10% in cash. I wouldn't have had, even if I'd known, I wouldn't have put 100% to cash because I believe that the businesses were undervalued. I couldn't have imagined uh, in November, when everything was singing and dancing and everyone was so euphoric, I couldn't imagine that in 3 months the market would be down like 20%. Um, and I tried my best with the experience that I have to back into businesses that I felt, okay, these businesses have strong balance sheets. Some have, more growth than others, but I wanted exposure to different aspects of the market, whether that be something like cybersecurity or defense, or whether that be into, let's say, the AI sector. I was trying my best to kind of have different exposures to the market as a whole. And, now that the things have sold off, I just feel like it's important to just wait and just to see, because having a knee-jerk reaction at this point, I feel that it wouldn't be constructive. Yeah, and that's all I wanted to say. Okay, if anyone wants to ask any questions. Okay, thank you so much. Thank you. Bye-bye. Thank you so much.
Okay.
Bye-bye.
Thank you, Michael.
Thank you so much. Bye-bye.